Hello everyone, Julius de Kempenaer here with a new video for Stockcharts television on Monday the 3rd of June. And I want to kind of build on a little routine that we had back in the days of Sector Spotlight. And in the first week of the month, I always did a look at the monthly charts, the just completed monthly charts for all the sectors. And I thought, it's a good moment to look back at what happened in the last month and then put everything into a longer term perspective. So the plan is for to do that, to continue doing that. So that's what I'm going to do in this video. Walk you through the monthly charts of all the sectors and the S&P 500, and then put everything on an RRG and make an assessment of the relative moves. Just as a heads up, this is all very long-term stuff. Monthly charts and especially the monthly RRGs, they're looking at really long-term trends, really long-term price trends, which is what we're looking at when we look at the price charts, but also the relative trends that we use on the RRGs on the monthly time frame are really long-term. So they can differ quite significantly from what we see on the daily and the weekly RRGs that we most of the time use, but it gives you a good background, a good, sense of situational awareness of where we are in the longer term picture. And I think that every once in a while and once in a month seems like a good time to go over that vision, to go over that realization that how things are developing within that longer term time frame. So let's start. By the way, I'm using the indices, so the index ticker symbols. In this case, dollar SPTS is for the communication services sector index, instead of the ETFs that we use most of the time for the RRGs. And the reason is that these are the actual underlying indexes that the ETFs are tracking, and they are less influenced by the dividend payments. We can do that with the underscore sign on the SPDRs, but for these longer term charts, I prefer to use the actual indexes. So that's what we're doing. And we're using a logarithmic scale, semi-log scale, as you can see here, because we're looking at really long-term data sets. And this gives you a better view of the percentage moves that we're making. It puts it all in a better perspective. The only thing is that I will not use any angled trend lines on semi-log charts. There's a bit, we can have, put 5 technicians in a room and you'll get 10 different opinions on whether you use angled lines on log or semi-log charts or linear arithmetic graphs. I don't think there is a final winner, but I personally don't use angled trend lines on log charts because I think that in reality that had to be a curved line. So if it's a straight line on an arithmetic chart, it should be a curved line on a semi-log chart. Anyway, rambling on, time for another occasion, or a discussion for another occasion. Let's start with the chart. So here is the communication services sector, and what we see here is that the strength for communication services is continuing. We recently broke above the previous high that was just below 290. So here, this level here is about 287, comfortably above it, still trading above it. And that basically underscores the strength for the communication services sector from a longer term perspective. The next target that we may look at, and actually goes back to 1999, mind you, that's 25 years ago. 340 is the next price target for the communication services sector. By the way, 1999 is the year that Stockcharts.com was founded. 25 years this year. On to the next one, that is consumer discretionary. And you can see that after that big dip, consumer discretionary is still not back to the levels of 2021. I've labeled all these charts with the direction of the trend as I see it. It's 90% is based on simply observing where the highs and lows are, and I'm looking at higher highs and higher lows for an uptrend and lower highs and lower lows for a downtrend, and anything in between is a neutral. Now if you look here, you will see that there is definitely a series of higher highs and higher lows in play. We bounced off of resistance around 1510, and we're now consolidating, and we're still above the most recent low, which means that this longer term trend is still pointing upward on the monthly time frame. We go to consumer staples, breaking to a new high. If you fail here, this is April 2022, where we had a big spike to 850. But I think that the real resistance was somewhere here, 815, 820. Mind you, this last bar here is only one bar of trading, so we're gonna kind of ignore that for now. So last month we barely broke above that overhead resistance level, and this month we will get the proof whether that is a solid break, a reliable break. As long as we stay above, let's say 815, I think that consumer staples can be considered to be in an uptrend still. And we see here, so here's my low, here's my high, and you can see how this is continuing higher. That's why I've labeled it as an uptrend. Go to the energy sector index. It's again pushing against a very important overhead resistance area, I'm going to say 720, maybe even 740, 720, 740 seems to be a heavy overhead resistance area. If you look at the 2 years before, you can see that all the major lows are higher. So again, I'm not going to draw an angled trend line, but this could qualify if we put this on an arithmetic chart. Why don't I do that for you? Let me just duplicate this chart here, and I'm going to take off the log scale. So here you are, and you can see that we now have higher lows, almost horizontal resistance. If this break really continues, we could have a very nice break of an ascending triangle, which would be a very bullish sign for the energy sector index. And another trick that I often use is when you see these spikes here, these spiky moves, instead of an open high low close, make it a line chart, and you will get a better idea of what's going on. And now you can see how that resistance has played out here around 720. And if this holds here, this is going to be interesting. We have I'm going to say this is 1, 2, 3 higher lows, horizontal resistance broken, ascending triangle. And if we hold above 690 on a closing basis in the next month, then I think we can see a confirmed break out of an ascending triangle, which would be bullish for the energy sector index. And here is financials. The trend is up because we've got a low, a higher low, we've got a high here and a higher high, and we're now pushing against resistance around 700. For sure, if we break 700 to the upside, that'll be a very bullish sign for the financial sector index. And mind you, this is also a pretty decent market capitalization index, so it could very well be very supportive of a further rise in the S&P 500. Mind you, all based on monthly charts, all very long term. Don't be surprised if you see a chart like this just stay here for a couple of months. I mean, it's only 2 or 3 observations, but we're talking 2 or 3 months in that case. Or a drop back to, I mean, this chart does not get hurt or harmed when we drop back to 625, to that previous high here. So you got to adjust your thinking, your orders of magnitude that you're thinking to assess these longer term charts. Overall, this still looks pretty good. We go to the healthcare sector, quite similar. We tried to break, didn't work, but also here, if you look at the positions, high, higher high, low, higher low, so it is an uptrend, technically spoken, but you can see that we're bouncing into resistance here, and we need to actually move higher and probably take out, so these are the highs of February and March, maybe even April, all in the region of 1725, 1730. If we take that out, that'll be a continuation signal for the healthcare sector to push it higher. Here's industrials, very clearly in an uptrend, longer term trend, monthly trend, still going higher, very supportive for the industrials sector index. But again, mind you, this sector here, this chart is now trading at, let's say, 1030. This can go back to 955, 960, 955 without harming this trend. And that's a quite decent decline that you can see in these monthly charts without the longer term trends getting harmed. So that's why I want to put everything into perspective and is a longer term wrapper, so to say. And within this time frame, you need to look at your weeklies and maybe even your daily charts to kind of pinpoint where we are on both a price and a relative scale. Now here's information technology, probably the most watched sector, and we've seen some decent declines last month. But if you look at the chart itself, this is the month of May, we actually broke to new highs. So it's actually pretty bullish, despite, last 1 or 2 days. If you just look at this chart, and I mean, a very good exercise is always if you just take away the name and the price and the time scale, I think everybody would agree that this is a very bullish chart. And that is true. The longer term trend in technology stocks is definitely bullish. Are there risks in the near term? Maybe. But, longer term perspective, definitely higher highs and higher lows in play. And last month, we broke above the previous high, which was 38.96 in March. And now we had a new high at 4,097 in May. Higher highs, higher lows. Uptrend is intact. We go to materials, a little bit more difficulty, running into resistance dating back to 2021, pushing against it for, since March already. So 1, 2, and then 3 months already, we're pushing against it. Didn't manage to convincingly break higher. But if you look at, here's the last high, maybe this one's also slightly higher, then this high is higher, and you got low, higher low, and whatever is going to come next. So all in all, material sector also in an uptrend. So all these sectors still, if you noticed, all these sectors, and we're looking at prices, we're looking at price perspective, they're all in uptrends. So, I hope that you agree with me that we're building the picture here of longer term trends for each and every sector, showing uptrends, and maybe they're running into resistance, and maybe there is some short-term risk, but the longer term trend is definitely still there. So here's the first one and the only one that is not in an uptrend. I'm going to call this, you can see how this is kind of moving sideways. You could even argue it's a downtrend, but maybe that's too much of a good thing. So I'm going to say this is a sideways move. This is a neutral trend with support around 205, 206 and resistance somewhere between 255 and 265, so to say. Probably the weakest chart of all 11. And if you look at, if this is your weakest chart in the universe looks pretty good. Here's utilities. That was in a downtrend for, since the end of 2022. Those of you who've watched Sector Spotlight will remember that this was the sector that was always labeled in a downtrend. And then it kind of put in a, so here's your first higher low. That was February. And then when we broke the high of December, which was in April, we started a new uptrend. And that was definitely confirmed last month, in the month of May, when we kind of closed at the high here. So this last day, this is 1 day of trading. We're going to ignore that. But we are now in an uptrend, higher highs, higher lows. And, if you look at the longer term trend since 2009, maybe even since 2003, this is all still looking very good. And we just went through a bigger correction here, of which we're now coming out of and moving higher. So looks like we're running into the first area of resistance at 370. And then here, obviously, ultimately, is 395 is the level that we would need to break to actually push utilities into uncharted territory and moving higher. And then the last one is the S&P 500. No surprise that with all monthly charts in uptrends, except for the real estate sector, the index itself is in an uptrend. And of course, you can see how this is a series of higher highs and higher lows. We're kind of getting into a bit of trouble, maybe. Let's zoom in slightly here and make this chart a little smaller. Just zoom in at the end. You can see that we're already since March, we're playing around with these highs, 52.65. So here's 52.64. Last month it was 53.41. So there is definitely an area of resistance here. But look at this. Old resistance, once broken, gets back as support. And for the S&P 500, there's plenty of support waiting underneath. First level, probably 5,000. Rounded off. Then there's 4,800, which was the line in the sand for a long time. And then we have 46.30, which was also a very important resistance level back in the second half of 2023. So with all these subsequent breaks to the upside, there is now a ladder of support levels to the downside. We're overstretched in many ways, so a bit of a correction, very well possible, but bear in mind that the longer term trend for the S&P 500 is definitely higher. Now, from the price charts, which give us price trends, absolute trends, let's take a look at the relative movement, the relative trends for these sectors on a monthly basis. So we load up the RRG, and again, I'm using the indexes, the underlying indices, and we're moved to a monthly RRG. And let's put it on 12 months, so that is 1 year worth of data. And as I told you before, these are really long-term trends, so don't try to put this into a too direct relationship with the weekly RRG, I was going to say. There's definitely a relationship, of course there's a relationship, but this is a really long-term trend. And if you would think in terms of validity or rule of thumb for outlook that you get based on these type of tails, my rule of thumb for weekly RRGs has always been that you are looking at trends that will stay there for a minimum of 3 months. So let's say that you move from improving to leading. That is a new trend, there's a change of trend. That is usually there for a minimum of 3 months and very often much longer. So when you look at the monthly chart, you could argue, so 3 months on a weekly is 13 weeks. If you translate that to a monthly chart, you're almost looking at a year outlook, so 12 months forward looking if you wish. Probably not right wording, but using that same rule of thumb, you could argue that a change of trend on the monthly you're gonna expect it to remain there for a minimum of 12 months. That's a long time especially for a retail investor, and I think most of our audience falls in that category, unless you're with a pension fund or you're running your 401k and you're looking at really long-term trends. By all means, this is what you need to look at. This is your monthly drawing board. This is your monthly trend in terms of relative strength. So we got the monthly RRG here, and let's just go over these tails and see where they are. So here's technology, highest reading on the RS ratio scale. And if there's only one metric that you use, then I would argue it's the RS ratio. And you just use it as a ranking system. And in this case, RSPT or SPT, the 500 Information Technology Sector Index, is the highest reading on the RS ratio scale, which makes it the strongest sector, the strongest relative sector in the S&P 500 in the sectors. At this level here, you could also see that it is far to the right of all the other sectors, and there's plenty of room for this sector to, even if it goes into weakening, to go through a bit of a corrective move and then rotate back up and stay on the right-hand side. Also, it is on the right-hand side. It is the highest reading, and you have a primarily vertical corrective move, and those vertical corrective moves are usually initially corrective in nature and not necessarily a change of trend. So technology, from a relative perspective, still a very strong sector. The same goes for communication services. You see how long they're still, because mind you, this is 12 months. This is a year's worth of data. Moving into the leading quadrant, losing a bit of momentum, but it's still moving higher on the RS ratio scale as well, indicating that it is still one of the stronger sectors together with technology. Look at as I said, look at the RS ratio reading, and it's the second highest reading in the universe. We go to financials. That is a very promising tail. From a relative perspective, it rapidly started to improve about 6-7 months ago. It's now inside the improving quadrant, traveling at a strong heading towards the leading quadrant. So the financial sector is definitely picking up from a relative perspective. And we saw that price chart is pushing against resistance. If that resistance is taken out and the price of SPF is moving higher, that will definitely help this relative tail to improve further towards the leading quadrant. Here's consumer discretionary. This is one of the weaker rotations, especially because this is a very offensive sector. And it's rolling over, and for the last 1, 2, 3, 4 months, you can see quite a strong deterioration from the consumer discretionary tail inside improving and now heading back towards the lagging quadrant. As we know, this is one of the weaker or one of the weakest possible rotations. So consumer discretionary is definitely not in a good spot from a relative perspective. The price chart is still very decent, but from a relative perspective, consumer discretionary is definitely a sector probably to avoid. And then here is real estate. Remember that real estate was the only sector on the monthly charts that was labeled neutral, probably one of the weakest sectors, and you can see how that works on the relative scale. It is the weakest sector right now. It's picking up in momentum terms, but it's doing that at a very low level. And again, you know, the RS ratio as being the primary ranking mechanism, the primary ranking metric, real estate is the weakest sector in the universe. It's picking up a bit of momentum, but still moving to the left, making it a very dangerous sector. And from a relative perspective, probably better to avoid. Here is utilities. Again, we saw the price chart, you know, changing trends, moving higher, but from a relative perspective, it's in the lagging quadrant. It's picking up some sort of momentum, but it's the second weakest reading on the RS ratio scale after real estate. So this pickup in momentum is, you know, if you look at the price chart, it's quite decent because, again, this is very long-term stuff. But if you just look at the table below, you will see that utilities is with, let me change this here. So utilities is with 9%, is only half of the S&P 500 performance. Most recently, utilities are really strong, but over the last year that we're looking at here, and we're looking at those long trends, utilities still has a lot of catching up to do. If we, you know that utilities is, or I hope you know, if you check the RRG on a weekly scale, you will see that utilities is inside the leading quadrant. And if that strength continues, then, you know, utilities still has a long way to go. It could be one of the very strong sectors going forward. But right now, second weakest reading on the RS ratio scale, second weakest sector from a relative perspective. Here is healthcare, still moving lower, which means that it is in a relative downtrend and picking up a bit of momentum. And look at the distances between the nodes here. It's getting smaller and smaller and smaller. So that pickup of momentum seems to be deteriorating right now. So continues to be in a relative downtrend versus the S&P 500 and definitely one of the weaker sectors. We go to staples, same sort of tail. Long tail moving into the lagging quadrant, picking up a bit of momentum. That's the recent improvement that we've seen in those defensive sectors, utility, staples, to a lesser degree healthcare, where there's a pickup of momentum, but on the monthly scale, we're still moving lower on the RS ratio axis. So, you know, from a relative perspective, consumer staples definitely still underperforming the S&P 500 in a relative downtrend, despite the pickup in relative momentum very recently. Same for energy. Energy has been very strong recently, but if you put it on a longer term perspective, if you put it into this longer term perspective, look where energy is coming from. This is like, 12 months. This is a really long move, and we just moved into the lagging quadrant. Shorter term, energy stocks being really well, but look at this, it's still moving lower on the RS ratio scale. Not to say that this cannot be turned around, but be aware of the longer term relative underperformance of energy stocks. And remember, energy stocks were pushing against that very long-term overhead resistance that went back years and years and years. Again, if we break that higher, it's definitely going to be a good sign. But from a relative perspective, on this monthly time frame, it's definitely an underperformer. Here's healthcare in the same boat as utilities and staples. Long tail moving into the lagging quadrant, picking up some sort of relative momentum to the upside, but still moving lower on the RS ratio axis, on the RS ratio scale. So still in a relative downtrend. Here is materials, same story. Inside lagging, picking up a little bit, but continues to move lower on the RS ratio scale, picking up of a bit of momentum. And then finally, there is industrials, which is only just crossing over into the lagging quadrant. So what we've seen is, well, let me bring all of that back. What we've seen is a lot of strength still for technology, communication services, financials, and let me take that away. And then the other ones are there is some promising rotations on utilities, staples, maybe real estate, maybe materials, but on the other hand also a rollover of consumer discretionary on the monthly. So the real strength is in communication services, technology and financials, and all the others still need a lot of work before they will become strong performers from a relative perspective on the monthly time frame. So that is the longer term picture that we're looking at, and we got to put that into perspective. We got to blend that in with our shorter term rotations as we see them on the weekly and the daily time frames, which we will look at again next week as usual. Thanks for watching. I hope you enjoyed this longer term overview. It's always good to step back and see what's going on in the markets. Let me know what you think in the comments, and I hope to see you again next week at a new episode here on Stockcharts Television. Same time, same place.